Hello and welcome to the next chapter of the EHE Fast Growth podcast series, now in vodcast form. I'm Simon Landy, the CMO at EHE, and I'm going to be your host on this series. And before I introduce today's guests, I just wanted to tell you a little bit more about EHE, where entrepreneurs help entrepreneurs. At EHE, we don't just talk about building tech businesses, we actually do build tech businesses. We build them, we invest in them, and we advise and support them every step of the way. This series is your backstage pass to our Venture Studio, where bold ideas meet the funding, strategy, and expertise they need to scale fast. In every episode, we'll share how we identify opportunities, how we're going to support founders, and create ventures that are designed to grow and succeed. Whether you're an investor looking for exciting AI deal flow, an entrepreneur looking to grow your idea, a partner firm supporting the startup and early stage ecosystem, or you're just curious about what drives fast growth businesses, you're in the right place. No fluff, no buzzwords, well, not many buzzwords, just clear, actionable insights from the people making it happen. Welcome to the EHE Fast Growth Podcast, the Venture Studio way. Welcome to our first episode. Since this is our very first episode, we're going to start with the basics. What is a Venture Studio? What does it do? Why does it work for both founders and investors? And of course, we'll have a detailed look into our EHE Venture Studio model. So joining me today are Guy Remond and Jack Warren from the EHE team. Guy is the co-founder of EHE, has over 20 years of experience in tech and scaling businesses, having sold his own software business of 16 plus years to Disney in 2017. He's now a director, investor, author, and advisor in the startup scale-up arena. And Jack is our head of investor relations with a track record of raising capital and scaling global businesses. Guy, Jack, lovely to have you both here. How are you both?
Lovely to be here. I'm well, thanks, Simon.
Great to be here. Thanks, Simon.
Good. Right, well, let's get straight into it. I've said we're going to talk about Venture Studio. So, Jack, for those who might not be familiar, could you explain what a Venture Studio is and how it differs from sort of more traditional sort of accelerators and incubators in the market?
Yeah, it's similar, as you just mentioned. It's kind of a play on a mix between an incubator and a venture capital fund. It takes founders on the journey through a long-term commitment, all the way from the incubation stage, all the way through to exit. Venture studios have become really popular in the US over the past few years. Some really large businesses and exits have taken place out of venture studios. You've got Slack, Snowflake, HelloFresh, and it's an emerging concept in the UK that's becoming more and more popular.
Right, brilliant. And I guess probably one for you, Guy, then actually. What is it about the EHE Venture Studio that sort of sets us apart then?
Well, for those people that are listening that know us individually, that I think most people will realise that we want to do things a little bit differently and look at things afresh, which is what we've done with the Venture Studio, or the EHE version of the Venture Studio. So we've got one extra, I think, magical ingredient. So for me, the EHE Venture Studio combines a tech incubator. So what I mean by that, the startup factory in our case, and where we have the capability to build complex AI systems internally on behalf of entrepreneurs. We can also do due diligence work. We can also lift the hood on potential investments. We can advise entrepreneurs. So we've got that real deep technical capability. We can build the stuff we invest in ultimately. That's what we can do. And with the Startup Factory, we have our own little mini incubator. So quite often, if anyone ever comes into the office on Oxford Street in Manchester, then you will, see some of the Startup Factory investments. And we invite people to work with us during the build of the product, but we also invite them to come back and use the facility whenever they need to, and just lean on our advice. So we've got that really deep technical capability and advisory parts of the business. We then got the venture fund itself. So we can and we do invest in pre-seed, seed, and seed plus businesses, and sometimes I'd argue early stage A for companies that are looking to go for high growth. So they kind of prove the business model. They're getting sales, they're getting turnover. They might not be making profit at this point, but that's fine. But they've got a path to profit in the relative near term, and we co-invest as well. So we invest alongside many different partners that we have in the investment space. Companies like Mercia, Maven, Pretora, Fearless. All these kind of companies we're getting to know and we're building relationships up with to allow co-investments alongside them. And then the final part, in addition to the tech capability, in addition to the venture fund, we have the advisory parts of the company. Now, we're really unusual, I think, in the fact that we are primarily made up of successful entrepreneurs who have had 8 and 9 figure exits, including Simon on the call, and what I call entrepreneurial operators. So people that have been on our boards and been with us on the journey from building a company from an idea through to an exit. So we have lots of entrepreneurial experience, as well as a mix of investment experience. Our chairman, for example, is the ex-FD for LDC, which is a Lloyd's bank-owned private equity organisation, very successful. He was that for 15 years, very well known in the sector. And we have people like Neil Vose with a lot of corporate finance kind of experience as well to add to our entrepreneurial capability. So we've got lots of experience within the team, and lots of, for those that remember them, big Rolodexes, and obviously very digital ones nowadays, that we can call on, and we can point entrepreneurs in a direction. Every entrepreneur will come to the table with certain weaknesses and certain areas, gaps in their capability, and that applies to everybody. For me, the first person I would bring to my team is a fractional FD, because that isn't my area of expertise. I'll then bring other people with other capabilities to build a team. We know loads of people in these areas, so we can help the entrepreneurs that we support with both the build of their product, or when we invest in the product in the company.
Brilliant, thanks, Guy. Thanks for the mention. It's nice of you to mention me amongst that list of very impressive names. Thank you very much. So, how is it landing? I think that's quite interesting. We've been pushing this out now for the last probably quarter. So, how is EHE Venture Studio landing in the market? What sort of feedback are you guys getting in terms of the resonance of it, both with investors and with founders? Jack, you're doing a lot of work with founders at the moment, so how is it landing with them?
I think the proposition of fast capital, tech and advisory is particularly appealing to these sectors of high innovation, because the founders themselves tend to be subject matter experts or individuals with really deep roots in a certain space, when what they're really missing is that support infrastructure, the expertise to take them on the journey and get them from almost incubation stage, where they're helping create a proof of concept and visualize the product, to getting them ready for venture capital funding, where they need to demonstrate traction.
And you finding it quite a simple sell, or quite a simple sort of explanation?
We're finding that the proposition that EHE in particular are offering is really suited to co-investors as well, because co-investors might have very deep industry expertise, whether that's in agri-tech, med-tech, etc., whereas EHE can have the technical expertise and really ensure that the product is bulletproof and fit for purpose, built efficiently, and it just de-risks the whole proposition, not just for the founder using our expertise, but also the co-investors who are relying on them to protect their own investment.
I just wanted to add, actually, that the Venture Studio idea was added after we had the capability, which is an interesting way of doing it. I'd never heard of a venture studio before, but we already had the capability. We already had the tech expertise. We were building the fund. We already had the advisory kind of services. When somebody then mentioned venture capital, what that meant was, the venture studio. What that allowed us to do was to explain it far more succinctly. So it's just like Jack said, he explained it beautifully before. The EHE Venture Studio offers tech capabilities, offers funding, and offers advisory services. And actually in the UK, that's pretty unique. There are other venture studios, but none of them offer the kind of services all the services that we can offer. We are really unique in what we do.
Brilliant, great, okay. So I think you've sort of covered this, but let's go into a bit more detail in terms of the attractiveness to investors. So from their perspective, what makes that particularly appealing over a sort of more traditional VC or play?
I'll jump in. As we've covered earlier, the proposition of the venture studio, it firstly creates a more seamless journey for the founders because they're being backed all the way with capital, expertise, and tech or product. And it just means that journey transitioning from incubation to venture to exit much more smooth. Alongside that, the space that we're in is actually really attractive. The AI space, they've got over 1,400 AI first businesses in the UK and over 3,700 AI enabled businesses. So effectively, AI first being businesses that are building proprietary core AI propositions that they're going to take to market. AI enabled being applications of AI across multiple sectors to improve certain markets or businesses. Many of those opportunities are suitable for our venture studio model. So there's a huge amount of investment opportunities to select from. And the fact that AI is touching on many sectors also helps diversify an investor's portfolio, which also can be appealing.
Yeah, and I think I could add to that myself. In terms of some of the investors that that I've come across, they really rate the fact that how close we are to the investments. That they get real comfort from the fact that we are extremely close to them. Guy, have you got something you want to add?
Yeah,
as well?
I think just to add to what both of you guys have said, I don't need to repeat what you chaps have said, but some of the other investors come to us to do the due diligence. I think that pretty much says everything, to be honest. They trust and rate and value the fact that we have a deep technical understanding that's baked into our business.
And in terms of being a tech partner of some of these startups, not all of them, but some of them, it also gives peace of mind that as also cash investors into these businesses, we're going to ensure that the products and technologies are built efficiently and effectively because it's in everyone's interest to do so, and that gives co-investors peace of mind as well.
Bro, okay. So in terms of the sort of day-to-day dynamics of how does it work within EHE? How hands-on is the team, and how does the sort of the team dynamic work within the team?
I'll pick that one up because I think it's relevant. I was genuinely proud 3 hours earlier, 4 hours earlier when we were doing our weekly catch-up. We've got so many different facets to the business, so many different things that are going on at the moment, and we have specialists in each of the different areas. So Simon, you've brought a sort of a deep marketing.
Not technical, definitely not technical.
Yeah, slip of the tongue. A deep marketing capability to the business, and you come on board and you're working really closely with Sogi, and the output has been massively different. We now have a marketing plan and a strategy and all that kind of really good stuff. And you've brought your ex-founder digital marketing agency experience to the team, but that goes throughout the team. As I said, Neil Vose brings the really deep capability of building relationships up with investors, many of whom he's known previously in other roles that he's performed in the sort of the corporate finance world. Jack has got a really strong proven track record in working with investors to raise money. So he's got other facets as well, from an accounting point of view, chartered accounting point of view. But primary role is to bring investment into our fund on an ongoing basis, so that we every quarter we've got money to deploy into early stage startups and early stage high growth organizations. We're aiming to support maybe 30 plus companies a year. That's no mean undertaking, the amount of due diligence that's required. And we actually do some really thorough due diligence, even at the level of funding that we come in at. We're not offering millions, because most startups don't need millions to get them up and running. It's into the hundreds of thousands as opposed to the millions. That's kind of what we bring.
Jack, you got anything to add to that?
Yeah, I mean, we've got really strong expertise, especially with technologists, we're operators, entrepreneurs, and there's a lot of experiences that they can lean on for advice. They can temperature check, they can use our team as a sounding board, just to keep them on the right track and prevent making mistakes. One of the biggest costs to these startups is time. They don't want to waste 3 months going down the wrong path, and having that support infrastructure can really prevent those mistakes from happening.
Hi there, I'm just jumping in for a quick break to share something really interesting about Venture Studios. Because if you're listening to this, you're probably either building a startup or thinking about investing in one. Did you know that startups built within a Venture Studio have a 30% higher success rate than traditional startups? Not only that, but they reach seed funding twice as fast, and they exit 33% faster than conventional startups. That's because studios like EHE provide hands-on support, from refining the idea to securing investment and scaling up. And since we're on the topic of startups and investment, if you're an investor looking to get behind high potential, fast growth companies, you can find out more about the EHE SEIS AI Growth Fund by visiting ehe.ai/investor-platform. We're backing the next wave of AI-driven businesses, giving them the support of a venture studio to scale faster and smarter. All right, that's it for now. Let's get back to the conversation.
And I didn't add the technical capability that we bring, which is kind of ironic, because that's my background and that's one of the things that I bring to the table. But we have a very, very strong network in the technical world, having built a software company with 70 odd people across 2 different countries, 3 different offices, and really building really complex back-end systems for very big companies. We understand technology. Alexa Vitokic, our CTO for the group and for the startup factory, he's got the grey hairs, not quite as many as me, but he has a few grey hairs now, and because he's kind of been there, done it in many different scenarios, working with many different types of companies, from Royal Bank of Scotland leading the open banking platform development, to commodities trading platform in London, to working with probably tens, probably not hundreds yet, but certainly tens of startups and building their kind of first product. And then the other big I think advantage that we have is, I kind of touched on it before, just to emphasize it, we have a really strong entrepreneurial streak running through the organization. We are entrepreneurs first, investors second, and that's really important and really unusual. A lot of investors are a little bit more corporate led. We're not. purposefully, and we want to offer something different. But we do have that kind of, we're not out and out mavericks. We understand the importance of diligence. We understand the importance of spreadsheets and finances, and we've all built reasonably big businesses, and understand what it takes. We understand the traits that an entrepreneur has to have to succeed. The hours that people have to put in, all these unseen things quite often that happen. Some of the risks they have to take. Many people put they put the company and their employees first before themselves. You're always, as an entrepreneur, you're always last to be paid. That's just the way it is, and that's one of the things that you have. So we understand entrepreneurs deeply and entrepreneurship, and I think that really adds to what we do in our proposition.
I agree. I think that sort of emotional, sort of empathetic approach can only be given by people who've been there. And I saw that from the first day I came in, and I see it every day within EHE. So no, thanks guys, thanks for that bit. So just move on a little bit. Obviously, you can't pick up a newspaper. Do people pick up newspapers anymore? You can't go online anymore without hearing about AI and where AI is going. So in terms of our focus, or EHE's focus on AI. Obviously, the Venture Studio has a clear focus on AI. Why? It was definitely one for you, Guy. Why did we choose to specialise in that area?
Well, we actually made that decision 3 years ago. So I'd like to think that we preempted the sort of more recent focus on AI. And one of the reasons is that myself and EHE's co-founder, Gary Fletcher, successful entrepreneur from the leisure industry, having built and sold a number of companies in that sector. We go to an event that we've talked about on previous podcasts called Abundance 360. We go every year. It's based in California, and it's literally my favorite sort of 3 or 4 business days of the year, because I get to properly geek out at what is coming around the corner. But aside from the geeking out, what it gives us is it gives us a glimpse into the future. It gives us a competitive advantage, an unfair advantage over many other companies, because we know what's coming around the corner. We can react quicker and be the first to be ready for the changes that are happening. And those changes coming thick and fast now. You've seen how quickly AI has arrived and is developing. The capabilities are increasing daily, right? So having that insight into where it's going, what opportunities that makes, where the dangers are, is a really big help. And not only does it help EHE in the way it positions itself, we then pass that knowledge on to all the companies that we work with, and it gives them an unfair advantage.
Yeah, cool. So following up on that, Jack, what do you see any particular challenges facing the sort of AI founders that we are talking to at the moment in relation to just the speed at which AI is changing our lives?
Yeah, one of the first things that we have to cut through is the AI capability that they're promoting a proper AI use case, or are they just using the AI term to bolt on and try and make the business sound more attractive? And we're quite quick to be able to slice through that and really understand whether what they've got is quite unique or proprietary and has a strong use case and product market fit. Second to that is these founders are, as I said earlier, that they're very, very smart, genius people, and they tend to be subject matter experts in their area, and they just need that technology back in to bring their ideas to life. And what's great about EHE is we've got that support infrastructure, ultimately, to de-risk their ambitions and their plan, but also enable them to stay focused on what they're great at, and that innovating or creating that unique product. What I would say is the AI market last year alone, I think 37% of all venture capital money went into AI businesses, which is just a landslide compared to any other in any other sector. And I know within that there's some real large benchmark deals that caught a lot of attention, but from what we're reading, it's also continued. That trajectory will continue over the next 3 or 4 years, and the timing couldn't be better. As Guy mentioned, this was something that was in the works 3 years ago, and it just happens to be that we're entering at a point in time where it's very appealing for investors, but also for founders to access capital because of the impact that AI is having across so many spaces and sectors.
Well, I think the that kind of insight as well helps with due diligence. It helps us to understand what represents good, and maybe gives us an insight as to what is more likely to succeed. So I like to think that it gives us an unfair advantage in the due diligence side of things.
Yeah, and I think, given that it first came to the surface for us 3 years ago, we are running now. We're not new to this. We're not just hitting the ground with it. We are up and we are running, and I think that is, for what I've seen, that's very favourable when we're talking to both founders and investors at the moment. We clearly have a direction that the people are interested in. Cool. Thank you very much for that. So in terms of things for founders, Jack, in terms of founders that are curious to learn more about venture studios, what advice can we give them in terms of how to get started, or to whether to assess whether that is the right model for them?
Yeah, I think any founder that's been bootstrapping a business today, the natural progression would be to approach a studio, because they can then take them on that next leg of the journey and on to the next leg after that, all the way to their end goal. And it's a partnership, so it's a long-term partnership. So a studio will work alongside them, pivot with them, develop the idea with them, and take them in a direction that ultimately achieves the most effective goal and ultimately an exit opportunity for the founder. But in terms of having a studio partner versus not, what I would say is it can be quite difficult for a founder to know when to approach venture capital, because they need to know they've got certain ducks all aligned, or they need to know they've got certain traction, or there's lots of question marks about what the tick boxes might be to access a venture capital, and they don't want to almost do that too prematurely. And I think a great part of the proposition with a studio is they can hold the hand through that whole process. Not only hold the hand, but make sure that they're prioritizing the key enablers and triggers that would make them successful in that process. And that's quite effective, because again, time is not lost then. It's not, they can spend 6 months fundraising only to find out that they've not ticked a couple of key enablers that they could have found out sooner. A venture studio partner will highlight that very early and almost not let them get distracted too early with a fundraise. They can focus on the business, and at the right time the studio partner will then say, right, now's your time, you're ready, and we're going to support you through that. And not only support you through that process, we'll probably bring you some co-investors alongside it.
So in terms of, give us some practical examples here in terms of the founders that we've been talking to over the last 6-9 months. And I appreciate we were developing our venture studio concept at the time. Do you think some of them came to us knowing that they needed that kind of support, or do you think they came to us looking for a studio or a venture studio or a venture, and we've helped them determine what's right for them? Or do you think, so do you think some knew already, or do you think we've influenced that? Because that's, for new founders, that's another way of doing it, isn't it?
First-time founders sometimes don't know what they don't know. Well, always don't know what they don't know. And I think when you're getting into bed with a founder, with an investor, you really need to understand who that investor is and what they're about. And there are plenty of investors out there that, maybe don't quite understand entrepreneurs in the way that we do. So, when we get involved and when we bring in, some of the people that invest in our fund, well, most of them are actually successful entrepreneurs themselves, high net worths, and they have something to offer. And quite a few of them actually want to get involved with the company and help the company be successful, because that's great all round. It's great for EHE, it's great for the investor, and it's great for the entrepreneur. So, there's no losers in that kind of scenario. And the really good thing is that, if they are a successful entrepreneur, they know how hard it is. They know the mindset you've got to have. They know that whilst the figures are really important, so is gut feel. And so is, just going with what you think is the right thing. And sometimes that isn't always the same thing that looking at a cash flow tells you, or looking at certain figures tells you. It's always a mix of those things. And I do think some of the corporate investors lose that capability, because quite often the people that come in and sit on boards and look at basically the investor director, they have never run a business. They really don't understand fully what it's all about, and you never will unless you actually have done it. So I think that's one of the massive advantages that we bring, is the capability from within the team of people that have been there, done it, got the t-shirt, and can support the mindset of the entrepreneur, because they will go through rocky times. Every company does. Every entrepreneur goes through. They make bad decisions. There's nothing wrong with it. If you don't make some bad decisions, it's a little bit corny, but the reality is you're probably not pushing hard enough. You've got to keep pushing forward. You're going to get a lot of the decisions right, but not all of them, and that's fine. And in the corporate world, that goes against you, because you have to, produce a report and build a business case, and then if that doesn't work, then it's seen in a bad light. I don't think that should be the case. In the entrepreneurial world, you've got to try things, you've got to push the boundaries, you see what works, and if something doesn't work, either pivot and change it, or actually just bin the idea and move on and go to the next idea, because that's how you move forward quickly, and that's what you've got to do in this world. But only certain people get that.
What I would say is, following what you said, Simon, do you think these founders know enough about a studio before we kind of engage with them? And the answer to that is they know. They kind of peel layers of the studio as we get more and more engaged. They see different pockets of value that we can support with. We have a lot of financial expertise, and at that stage, making sure that their financial projections are all, can kick the tires on them hard and they're fit for purpose. Having that expertise, just give them support, is very valuable. We have an eye for IP. We're dealing with high innovation businesses that are very disruptive. IP is a huge topic, because in our model, we like to believe that these founders can go on two different trajectories. The nature of the businesses that they're developing, they can go on to be acquired for their IP in the industry that they're disrupting. Equally, they can go on the traditional trajectory of financial trajectory of growth and find an exit opportunity that way. So on the IP side, we're very strategic for them. We can make sure that they've got the fundamentals covered, that they've got a strategy and a roadmap to ensure that they're optimized for both scenarios.
Yeah, brilliant. No, that's really, really good stuff. And interestingly there, Jack, you talked about the future in terms of how these founders are going to exit. But what's the future for Venture Studio? So do either of you have a view on how the Venture Studio model is going to evolve over the next 3 to 5 years, particularly here in the UK? Yeah, Jack.
Sure. I believe, we're demonstrating the value, and it's been demonstrated not just with the founders, but with our co-investors, of our technical expertise. The advisory touches the business as and when required, but I do believe that these businesses need that extra support infrastructure of services helping them operate, and there is a potential opportunity for a broader support package that can be introduced, parachuting expertise, resource, advice, just ultimately again to make sure that the founders themselves are focused on what they're best at, whether that's innovating or building product, And I definitely see that evolving more and more, where the advisory and support offering broadens out to more business activities.
Cool. Guy, have you got anything to add?
Yeah, I mean, I do think things will evolve. I do think that if we can, along with other people, can put the message out there about what venture studios offer, then it's gonna make everybody in the industry move in that kind of direction. It won't be enough just to offer money, which is what a lot of the companies do currently. Honestly, quite often entrepreneurs, quite often entrepreneurs don't have a choice of investors, and they go with the only investor that's made them an offer. It's not always the right move, in my view. Sometimes it pays to wait a bit longer or take a different course of action to try and find the right entrepreneur, right investor that's going to offer more than just money. Occasionally, it's just money that you need, right? And that's fine. But very often, you want an investor that's going to be supportive, that understands your mindset and the mindset of an entrepreneur, and is willing to support that rather than go against it. And that happens all too often.
Yeah, very, very true. Is there anything either of you want to close with in terms of, obviously, what we've talked about Venture Studios, we've talked about sort of the direction of travel for EHE. Is there anything we'll finish on in terms of where EHE is going, brought on a broader subject?
Yeah, I mean, I'll just touch on sort of AI. AI is going to affect every single sector, and it already is doing, actually. And it's probably affecting way more things than we even are aware of at the moment that are happening in the background on the social apps that we're using, on some of the shopping channels that we use, even on some of the videos that we see online that are getting more and more realistic but actually aren't real. AI is coming into our world whether we like it or not, and it works across every single sector. So that, us being an AI specialist actually still allows us to work in every single sector, and that's the exciting thing. We're talking to an agri-tech organisation at the moment, and we're likely to invest in them. We're talking to a company that works in healthcare and has got a really exciting way of detecting cancers quicker than is possible at the moment. We're talking to a company in sort of like the journalistic world. There's a whole raft and plethora of different companies that we are dealing with, but the common link is AI, and that's the way the world's moving. So, I think I'm going to end with my kind of favorite saying, because I just think it's so true, that if any companies that haven't adopted AI in some form or other, whether that be to run the processes within their own organization to make them more efficient, or in the products or services that they're offering in the next 5 years, then they will have gone under in that period, or they will be in deep trouble, because everybody else will be moving into those areas and will become more efficient and will become better at what they do. They'll offer better products, better services, and they'll be more efficient in running the company. So you need to get on board.
There you go. You heard it. Jack, have you got any closing remarks, or is you happy with how Guy?
Just echoing what Guy said. It's becoming a utility in every sector. Adoption is key. I do think in the next couple of years we might see some very, very large businesses go the wrong way, and one of the root causes might be this: they're ignorant of that, not adopting AI, or thinking they didn't need to recognize it.
I've just got one really, what Jack said there really triggered something that, entrepreneurs, I think, many of them are aware of this, right? And it's happened in the past all the time, but I think it's going to be even more relevant in the future. Young, agile startups can move really quickly, and they can develop stuff. They can do the research and development on a shoestring. They haven't got a ton of processes. They haven't got 25 layers to get through before they can make a decision. They can make stuff happen really quickly. and they can innovate, right? And big companies really struggle with that. There's some companies that are better at it than others, obviously, but many big companies, because of the layers of complexity involved in their businesses, struggle to innovate quickly enough. That's where the opportunity is for entrepreneurs. That's where the opportunity for an exit is. It's building something that makes a difference that the big companies can't build cheaply or quickly enough. They will buy you. And, that's what most entrepreneurs should be aiming for and will be aiming for.
And that's what we're seeing. Well, good news is the AI is going to be the subject of another one of our series. So I'll have you both back on to talk about AI in a lot more detail. But I just wanted to finish off. Thank you both very much for your time. That's really, really interesting. I think the sort of key outtake for me about the Venture Studio is it is having it all under one roof. I think that's the key, in that, there are people out there, founders out there, investors out there, that they're going to lots and lots of different organizations to get advice, to get support, to get finance, to get to build the tech. What we're offering here is all of that under one roof, and I think that's a really, really compelling story. I'm looking forward to us telling it over the next few years. So thank you both very much, and look forward to our next conversation.
Thank you, Jack. Thank you, Simon, for being such a great chair of this, and for Sophie for setting everything up.
Thank you.
Cheers, guys.
Thank you for listening to this episode of Fast Growth the Venture Studio Way. If you found this valuable, don't forget to like, subscribe, and share it with your network. It helps us reach more investors and founders who are serious about building high-growth tech ventures. You can find Fast Growth the Venture Studio Way on YouTube, Spotify, Apple Podcasts, or wherever you listen to your podcasts. Want to learn more about EHE Venture Studio and about how we provide tech, funding, and advisory to ambitious startups? Visit www.ehe.ai. Thank you once again, and we'll see you next time on Fast Growth the Venture Studio Way.